Awesome panel talking about venture capital, the rise, the changes, where the industry is going with these incredible panelists. I will ask each of you to introduce yourselves relatively quickly because we only have 35 minutes for the stage. Please go ahead.
Thanks, Noor. My name is Ben Casnocha, partner at Village Global. We're an early stage venture capital firm in San Francisco, about $300 million under management.
My name's Heather Henyon. I'm the founding partner of Mindshift Capital. We're an early stage venture capital fund that invests in women-led companies in MENA and in the US.
My name is Kareem Elsirafy from Modus Capital. I'm the managing partner, and we are a venture platform that has venture builders, a VC fund, and we do venture building for corporates.
My name is Camilo Kejner. I'm a managing partner at Angel Ventures, firm based in Mexico, operating throughout Latin America and the US land market with 3 funds in operation and about 150 million of AUM.
Magnus, Grimeland, founder and CEO of Antler. We're global. We operate across 6 continents. We invest from pre-seed to Series C, about 700 million under management.
Thank you. So as you can see, we have a representation from pretty much everywhere in the world, and people investing across different stages of the ecosystem. What we thought would be interesting to bring is a collection of thoughts and ideas around the evolution over the last 5 years. Where was VC 5 or 10 years ago? Where is it going over the next 5 years? And how have these changes perhaps changed the way that we're investing? Heather, can we start with you? 5 years ago, what was venture like?
I think it depends on where in the world we're talking about. In MENA, it was very different than it is now. There was a lot more, I think, buildup of the angel investing groups. And now I think we see more of a trend towards larger venture capital funds, later stage investing, and also micro funds, which is what we've started. So smaller funds that are more niche and maybe more specialized, but also result often in higher financial returns.
And that's particularly in the region or on a global?
Yeah, I think globally the trend towards micro funds is one, but we're seeing it also in the region. And I think in emerging markets as well.
And over the next 5 years, what do you expect?
Well, who knows? If I knew that, I don't know if I would just be running a micro fund. But no, I think there's an evolution towards more inclusivity. I was at a conference last week in London that was a global gender smart investment summit, and there's much more happening, I think, around women. People are finally understanding that women also are a viable asset class and often result in higher financial returns, especially now where we're more focused on capital efficient businesses. And they've just been neglected for so long and underinvested in things like femtech, health tech, wellness, mental health. I mean, some of the sectors that I think are kind of the fallout from the pandemic, but things that have been societal issues for a long time everywhere globally. So hopefully we'll see, the movement from 2% of funding going to female founders to maybe 10% over the next
Hopefully.
5 years, just to be realistic. I'd love to see it be 50%, but I think that's maybe overly aggressive. So
Over time.
yeah, I don't want to dream too big. So 10% would be awesome.
Thank you. Camille, in Latin America and Mexico specifically, over the last 5 years, what has the evolution of that VC ecosystem looked like, maybe even over a 10-year period? And how do you see that continuing on?
So I'd say the most salient trend I could point out is that we've gone from government involvement to non-government involvement, and in a way that's a good thing, meaning we went from bearing very, very few managers 15 years ago. Sorry, I went back 5 more years than you asked, Noor. But very few managers to an abnormally large number of managers when there were government programs to develop the asset class, and then back to normalcy after those programs went away. So I would say, but that has had an influence, right? Because there was an abundance of funding. With that abundance of funding came the natural spike in valuations, then the normalization of valuations and pricing and exits. And I would say the most important thing that we are seeing is slowly that shift. Latin America has still to deliver that first generation of entrepreneurs turned investors, which is what drives other more developed ecosystems. And in the last 5 years, we have had our first round of very big exits that have generated entrepreneurs with the ability to fund other entrepreneurs, and that makes it a much more virtuous ecosystem in itself. And for the next 5 years, what we firmly believe is going to happen, and we're going to see more of, and I think there are some examples already happening from companies from emerging economies going to other emerging economies and acquiring. Kavak is an example. Swivel with all its ups and downs and whatever, it's also another example. We are firm believers in South to South and global emerging market winners, companies that don't necessarily have to look at the US or Europe for development, but can look at other more similar economies in different geographies.
Thank you for that. And as we think maybe about more traditional parts of the world in investing, what have you seen over the last 5 years? And interestingly, what do you really expect given the changes that have happened in the last 12 months?
Well, I kind of think of it as 3 eras of venture capital in Silicon Valley over the last, say, 20 years. So maybe 15, 20 years ago, you had John Doerr and Mike Moritz sitting on Sand Hill Road doing all of the venture capital deals. Like, it's remarkable how small the ecosystem was. All deals across all categories were monopolized by just a few winners who made billions of dollars investing in all the best startups. That's what I think of as like the artisanal era of venture capital. Mostly men, small number of people sitting around a table, acting as masters of the universe, doing all of the best venture deals. And then what we saw happen in the last, say, 10 to 15 years is the rise of a different model of venture capital, which I call like the industrial model of venture capital. So these are groups like Andreessen Horowitz and Excel that hire hundreds of people, generate massive amounts of management fees, and take sort of have this argument that with scale you can hire people and provision portfolio services and invest globally and across categories at epic scale. But as the world has gotten even more entrepreneurial, now there's founders all around the planet inventing technology that's conquering every industry. Even these industrial models are not agile enough to meet all of these opportunities. And so just in the last 5 years, I think in Silicon Valley, but also around the world, we're in this network era of venture capital where firms are beginning to unbundle and ally with a wide range of actors to find the very best startups. So they're not trying to hire all of the best talent internally, but create a more flexible organization where they can find the best founders wherever they are. And so this transformation from an artisanal crafts business that was basically just in Silicon Valley and Boston to the industrial model to now the network model, to me is such a fascinating trend, and I think it's going to be the trend that drives the next 5 to 10 years of venture.
I would agree with that. Magnus, do you think that that's happening? I mean, you operate very globally and you use this network model. We have over 200 partners now, I think, at Antler. Talk to us about that globalization and how that plays into your business model.
Yeah, thank you. You're spot on. I think there are 2 major trends we're seeing currently. One is venture capital and innovation is becoming decentralized. And the second is the playing field is being leveled. So I think when I talk about decentralization, if you go a decade back in time, how many cities in the world do you think had created a unicorn? Anyone? How many cities? Decade ago? Nobody wants to guess.
5.
5. It was actually about 25. 25 cities in the world. It was mostly in the US, China, and a couple of European cities. How many cities now in the world has created a unicorn? Anyone? 180. 180. So innovation is becoming decentralized, like founders anywhere, whether it's in Riyadh or Dubai or in Nairobi, wherever it is, you can take on the world's largest companies and you can win. Like great example is Spotify, coming out of Stockholm, 1 million people there, taking on Apple and beating them in music, right? Taking on a $3 trillion company and winning. Take Atlassian out of Sydney, also tiny city, winning against Microsoft in productivity software. So people can build great companies out of anywhere. And typically you also see in more complex regions like the Middle East, Southeast Asia, and so on, local operators win, right? Like the local e-commerce companies win, and the way big platforms can come in is to acquire them. Same is happening in Southeast Asia. So that's point number 1. Innovation is becoming decentralized, and that's why we have teams on the ground in a lot of really interesting markets. Number 2 is the point that was made very well here earlier. It's like, over the last decade, about 2.3 or 2.9, there's different statistics, % of capital has been deployed into women. It's the same with other minorities. It's like this big pool of amazing talent that has not been accessed because it's been a smaller boy club, as you pointed out earlier. That is changing now. I mean, it's still not where it needs to be, but it's a slow progress towards leveling the playing field, meaning that exceptional people, no matter what gender they are, no matter where they come from, no matter what their background is, can access these networks because VCs like ours and others are deploying capital into these groups of people. So for example, if you look at the Antler portfolio, 35% of our portfolio is female co-founders, and we back minorities from all across the globe. And I think that those are two major trends that will really make the world a better place.
Thank you. Kareem, I'm going to turn to you for a minute, and really, as you think of New York, where it is home for you for a long time, New York's always been a hub for finance, a really melting pot of many different people. How has that transformed over the last 5 years? How has New York really used the advantages that it's had as a city to really inspire others and become an innovation hub? And what kind of innovation are you seeing coming out of the East Coast and out of the region and the world?
Yeah, so New York, it began by having a lot of the capital, right? And it's an absolutely baseline requirement. But what you're seeing is I think like more of the emergence of the venture fund platform, right? Where you have VCs deploying capital as a necessary requirement, but they're providing additional value added, right? And seeing how VCs are looking at how can we support startups like the Andreessen model, right? Helping staff up, et cetera. And I think that New York is really unique in that because it's a melting pot, you have so many people from so many different backgrounds coming in, and they're essentially absorbing the knowledge of what it's like, what it takes to build a successful company, right? And then you see some of them even bringing that back home, like for us, with example, right? Like for me at Modus, my previous company was a New York-based tech startup, and then I decided to come to the region and bring some of that talent, some of that knowledge, some of that know-how to the region to help support and kind of help develop the innovation ecosystem.
Thank you. So I'm going to pick up something you said there, which is like it's the capital hub, and that drove the innovation. So as we think about VC over the last kind of 10 or 20 years, the amount of capital that's in the VC ecosystem has grown multifold every single year. And yet 20 years ago when venture capital was really a cottage industry, it was about the power law. So many of us that are in the industry know what the power law is. In a very rudimentary way, it literally means that one company is supposed to return the entire fund. So if you're investing in 20 companies, you're banking on one being that 20, 30, 100x that you need, the Google of your portfolio, like with KP or so on. As a lot of capital has gone into the ecosystem, questions have arisen, is this still possible? Do we still as VCs operate with a power law mindset, or are we indeed as large as private equity was 20 years ago, which operates with a very different portfolio construction mindset of 20% of the portfolio will fail, 20% will do incredibly well, and to Kareem's point, now we need these big value creation teams to make sure that the rest of the portfolio will do well enough to create the returns we need. But I think ventures still have two mindsets. So I'd love to hear, as you operate and you think about your portfolio construction, which one do you lean more towards and why? We'll start here.
Sure. Well, I think there are many ways to make money in venture capital. There are lots of different business models that can be successful. So anyone who tells you that there's one way to construct a fund is lying. And a lot of what will go into the criteria of a good business model is what ecosystem are you targeting, what's your team construction, et cetera. So historically, the issue in investing outside of the US has been the exits have not been as significant. And so for a lot of funds that have portfolio construction models that depend upon multi-billion-dollar exits, they have felt unable to invest in some of these emerging markets. But I think you're right that you can make money. You can 3 to 5x a fund investing in a set of companies that exit for $200, $300, $400 million if you own enough of the business. So I think we at Village do actually model investing in multiple multi-billion-dollar businesses, and we expect most of those, the 3 or 4 companies that we invest in that exit for more than $1 billion to return most of the capital back to the fund. So I still come out on, we're trying to make money with the assumption that the power law is in place, and we're trying to invest in the next Stripe, the next Coinbase, et cetera, that can be worth $50 billion. There are other ways to make money, and I think that's, to this trend of this panel, what's awesome about the last 10 to 15 years is there's now so many different structures and organizations and strategies it's not one size fit all, but I'm curious if anyone else embraces the multi-billion-dollar outcome power law dynamic or not, to her question.
I'll pick on Kareem first because you mentioned the value creation.
Yeah, no, I absolutely agree, right? And you know, to your point, you can have more, you know, smaller multiple exits, but that doesn't exclude the opportunity to have one of those become the unicorn, 2 or 3, right? There's the law of averages still plays, right?
But how many unicorns have there been in MENA?
Before or after February this year?
But you can still make money as a VC, right? You don't need a $10 billion exit to have a great fund.
Well, it depends on your entry point.
Yeah, but I assume prices are lower here.
Prices are lower here, so valuations are lower, so you can have a more reasonable Series A valuation that can get you a 10x.
But also in the region, it has a different construct, right? Like here you have a lot of very traditional family-owned business and conglomerates, right? And these are the potential acquirers at a much smaller number, right? You're creating value and you're creating value, solving a problem, and this is something that it may be a very, very perfect fit. It doesn't have to be a mass global consumer type of company that's built, but it provides enough value where somebody wants to acquire it, and you can exit at a much smaller multiple. So.
It's not even the multiple. What is it? 70% of exits in venture capital worldwide are industry M&A, and the average is just over $200 million. So the ones we hear about that get the press are in the billions and billions, but when you think about what is the average price of an exit, it's in that couple of $100 million range. So the question does become, where have you entered? Camille, what's it like in Latin America?
So I think you're very much, you can't escape your circumstances, right? And as you say, a large number of exits, the ones that mostly no one hears about, are strategics. And strategics are not willing to pay the multiples that you read about in the papers. These are transactions that largely go unnoticed sometimes. And those transactions, you need those in a portfolio to help leverage. But if you're asking me about how I feel about power law, maybe I'm a little bit biased because our latest fund, we did 8x on the fund on mainly 2 positions. And yes, you have other exits, the ones that no one speaks of, right? But clearly, we felt that we needed to have a vehicle that allowed us to still take the moonshot investments, right? To still stay focused on what really drives us, which is helping entrepreneurs go from 0 to either the moon or nothing at all. But you still have to be able to take those moonshots and look at the opportunities and have a chance to give them a chance. So those are smaller tickets, obviously, so they maybe don't move the needle individually as much. They end up more moving the needle as a package deal, but you still need to do both. So I feel it's a tricky question to answer. It's a mix of both strategies, at least for Latin America. And we have 18 unicorns in the last couple of years. Now,
18?
18 in the last couple of years.
Latin America?
Yes.
Wow.
So does that mean that after February, that's a different story? But pre-February, let's call them prefab unicorns, not prefab. But look, you have to, and those drive portfolio returns. Absolutely, they do. For a small number of very fortunate managers that have been able, such as ourselves, to be the first money in, as is often the case, in some of these opportunities. But do you still need the rest, the ones that are going to do the 2x and the ones that are going to be small exits that no one speaks of? Absolutely, you do.
Yeah. And Magnus, you invest across the world as well, and I think in seed more than anything, and pre-seed. You count on the power law working, I assume.
Well, so I think there's 2 parts to this question. So one is, I think the power law for a firm like us will always be in place, meaning there will be a few of our portfolio companies that will do exceptionally well, that will drive a lot of the returns. But that doesn't mean that the rest of the portfolio needs to fail, right? I think so far across our portfolio, about now 650 companies, we have a failure rate of 13%, so 13%. And a number of these companies have, they're worth 10, 20, 30, 40 million dollars, and they're getting exits. We sold companies at 5 million, 10 million, 15 million, which is still for us, 3, 4, 5x, and they're good companies that have contributed to another good company. So I think as a founder, and that's how many great founders get their start, right? They build something small, exit it. Next time they build something bigger, exit it. Then they build something even bigger. So I truly believe in that part of the ecosystem to drive value creation. Now, if you think about, delivering 8, 9, 10, 20x on your fund, it's still going to be driven by the outlier outcomes, which is why in venture capital in general we also back those types of companies, right, that are very much 0 to 1. But we also want to support these founders who are building something that will exit at the lower valuation. And I think it's important to kind of try to get your entire portfolio to try to succeed by creating network effects and systems to create an advantage.
Heather, do you see a difference between when women dream and the size of those dreams and when men dream and the size of those dreams as founders pitch?
Yeah, I think women are maybe don't dream as much, but they also are more realistic in achieving their targets. They like to outperform versus underperform. And women fund managers are really the same. There's been a lot of data recently across lots of asset classes, whether it's hedge funds, personal finance, endowments, that women are better fund managers and really have higher alpha because they take a long-term view. I mean, I think women historically...
We have people clapping in the back for that. So
Yay!
Thank you, Heather.
So, yeah, and I think this is something that hasn't been understood as much in venture capital. Even in the US, I think there's 2% of founding partners across VC funds are female, 10% of partners are women. I mean, in Mina, Noor, I think it's 3? So
There's
3
three of us.
GPs are women, yeah. So, and we all know each other. So the reality is we need more women to be on the fund management side in order to invest across female founders, because just like men attract men, it's back to the network effect that I think Ben was talking about. Women attract women. We understand the kinds of businesses they're building. There are companies where I'm on the board where my kids are users of the product, an ed tech company, and I'm the only woman on the board aside from the founder. So my view and my experience is very different than maybe the other male board members who don't have kids or aren't as engaged in their kids' education like women are. So I think,
and it's funny, like I think that the qualities that you look for in an entrepreneur sometimes where we look for is just unbelievable ambition. And just almost reckless levels of ambition.
Right,
are actually not necessarily the qualities that make a great GP. Like when you're running a portfolio strategy, you need to be disciplined and sober and reflective and cost-benefit analysis.
Yeah.
And so I think this, as much as we were generalized about inclinations of a particular gender, like we're going to say women are not as ambitious outwardly expressed when pitching their startups, and that might need to change. That might be the very thing that makes them great VCs.
Right. And also, I think I was talking to a male investor once who only invests in women-led companies, and he talks about how it's really because of financial returns. He's had much higher financial returns. I mean, Kevin O'Leary always talks about this from Shark Tank, that the companies that have returned the highest amount of profits are the ones managed by women. I think one quality that women have as founders is they're just highly committed. So they don't, a lot of guys, again, these are all generalizations, but, when they might walk away and say, okay, this is getting too hard, or I'm going to go work at a company where I can get paid a salary. So whereas women stay with it and stick with it, and it really is a slog for female founders and for women fund managers to raise capital. So if they're not committed and kind of to a fault sometimes, it's hard to make it successful. So, I mean, personally, I would always back women because of those reasons. I think the commitment, the all-in, these are the things that we look for in terms of this is a long-term game. This isn't something that you just, you're done in 6 months, you flip it and walk away. And this is a really long time horizon. So.
Thank you for that. I mean, I would tend to agree, but it's not a gender bias. So when we think about kind of the power law and what Heather just said, I think it's interesting to note that the male founders do have this $1 billion or $10 billion aspiration.
Yeah.
And so the power law really does apply to them. And as portfolio construction moves towards a mixture of both power law and I do want a lot of 5 to 10x companies, those are the ones that are being more diligently created by the women. And I think there will be more funding heading that way, I hope.
Yeah, but Noor, also we do, when we're investing, we look for, when we go in, the company has to show a 10x.
Yes.
So we know in reality over time, you might have a company that says we're going to do an IPO or really aggressive, and then they get acquired before that, so you don't realize the value. But I think also the other thing with female founders is valuations tend to be lower, unfortunately for them often, and we see a lot of them getting crammed down by male VCs. We just had a company we're closing now where they got a very predatory term sheet. Luckily, the founder, it's a mental health company. She's a therapist, and she actually said no and walked away from it. So yeah, I think that is unfortunately what happens. But it's for us again, it's sort of low-hanging fruit because we get in at lower prices, and then of course, if you're going to get a 10x on, let's say, a 5 million investment, getting 50 million is realistic, whereas 500 million is not, right? So back to the entry point.
It's fantastic. And I think as a VC asset class does evolve, we'll see more and more minorities and women attract more capital. Yeah. So we've talked about, the evolution over the last 5 years in terms of simply the industry, portfolio construction, amount of money coming in. What do you think about the global allocation of venture? So as we've gone from there's 1 or 2 innovation hubs in the world to most economies in the beginning start with this emulation approach. We're creating this for the region, that for the region. And now you're saying there's lots of global hubs, there's entrepreneurs dream everywhere. We're now in an innovation phase where it's best in class technology, how do I solve a local problem? As we've gone through this evolution the last 5 years and we are where we are today, do you believe we're looking more east or we're looking more west as we are in the middle? And what can be learned from both cultures? I don't know who to start with. Magnus, you keep nodding, so maybe I'll start with you.
I think what's interesting is if you look globally and you look at the agenda of every single government, innovation will be top 3 on the agenda. And everywhere, literally. If you go here, obviously we're here in the whole innovation conference. If you go to Africa, if you go to Asia, everywhere innovation is very high up on the agenda, which means that the government is putting resources behind it. They're changing regulation to make innovation easier, especially in a number of places where regulation has been falling behind, like in Europe and Asia and so on. So I think you'll see a massive growth in the areas where you haven't seen so much innovation yet. Take Southeast Asia. 2012, $300 million deployed into venture. Fast forward to 2022, $25 billion being deployed into venture. Look at what's happened in India over the last few years. Japan and Korea, they've been great at traditional industries, great at entertainment, brand building, not so great at the internet innovation. It's been more concentrated locally. They're making a big push now to build global businesses. Africa, I think, is the fastest growing tech ecosystem in the world right now, albeit from a very small base. Europe, has not been as great as other Western, regions in terms of innovation. Now, actually, the cost of really good engineers used to be higher in Europe than in the US. Now it's lower. So there are some competitive advantages there and change in regulation that means that the European ecosystem will grow. So I think that, there will be a shift still where the vast majority of capital going into innovation over the last few years, it went to the US first, China too. I think now you'll see more of that capital going to Africa, the rest, Asia, ex-China, and Europe going forward. And it's very clearly the trend if you look at how these ecosystems grow versus each other, back to the decentralized innovation that I talked about earlier. Which doesn't mean that China and the US will still not be huge, right? There's still huge opportunities, just relatively.
So I think one thing that's very interesting about that is you have to look at what's driving LPs of funds too, right? Like earlier on, LPs, it was pretty much, okay, you are investing in companies, these companies create value and solve a problem, and we want to be able to get in on the upside of that, right? Now you actually have LPs thinking more about, okay, financial returns, absolute necessity, right? But what kind of impact can we have? And I think this is something that is really driving a lot of the upcoming and emerging VC funds and deployment of capital into these emerging innovation ecosystems, such as Africa, for example.
Yeah.
Thank you.
And I think you also have to acknowledge that certain regions will never be or are many years away from becoming true deep tech hubs, right? I mean, in Latin America, I'll be the first to tell you, we're not a deep tech hub. There are certain industries where you can see a glimpse of deep tech food tech being one of them, for example, right? Where you're solving very particular problems, particular to the region and maybe to other emerging markets with resources that you have at hand. But for the most part, we're still in that phase where we are creating the this for the region or the that for the region, and that's okay. And there's still an evolution within that framework because, for example, if you think about being inclusive and if you think about helping minorities, what passes for financial inclusion, for example, these days, is not what passed for financial inclusion 10 years ago, right? Or 15 when we started investing. 15 years ago, if you had a company doing microloans at 1% daily interest rate, that was financial inclusion because you were bringing these people to the financial system, right? These days, no one believes that 1% daily interest is inclusion of any kind. So there has been an evolution of sorts within that, but it's okay to acknowledge that for certain industries, we will never be a deep tech hub, and that's okay. Yeah. And there's still money to be made, and there's still problems. There are still problems to be solved and people to help by being very good at solving issues, adapting them to the local needs.
Thank you. So we are out of time, but before we wrap up, I will ask you in 3 words, what are the most exciting things happening in your sector, in your portfolio, or in your geography today? So you can use a bit more than 3, but not more than 1 sentence, because I just keep being told.
Well, since I'll leave AI and crypto to other folks, I'll say the boring thing, which is I think we're still very early innings of enterprise SaaS and cloud computing. There's still a remarkable number of organizations around the world that are not in the cloud. So it's the boring answer, but it's what's generated a ton of venture returns, enterprise software.
Heather?
Well, I'll say a few more than 3 words, but I mean, I think obviously female founders are super exciting. We have a massive pipeline that is great. And then also the other area that we're really excited about is wellness, and across all segments of society, whether it's for kids, elderly, there's just been so much underinvestment across this that half our portfolio now is weighted towards the wellness sector, and we just see it growing massively over the coming 5 years.
3 words, founders being empowered, and I think that's kind of what I was alluding to earlier about the platform approach. It's really great to see an ecosystem, especially in the MENA region as it develops, getting the right type of support from government and then also the private sector in addition to the capital, the network, the operational value added, et cetera.
Camilo?
I'll say south-to-south collaboration. Those are my 3 words, but I'll add more than 3 like everybody else. I'll say entrepreneurs becoming investors, another one in 3 words for you. And I would say Latino founders, more than 3 words, thinking about Latin America and solving issues with more resources with a US view, but looking south rather than the other way around, which is what's traditionally happened in the region.
Thank you. Agnes?
Start off by saying progress is not inevitable, right? The better future will be built by great people innovating. So now we have this tremendous world we live in that is truly global for the first time. So I think everyone who's incredibly talented anywhere in the world can disrupt any business and has the responsibility to innovate and do so. And the investors here in the room have the responsibility to solve them because that's the only way we'll move civilization forward.
I love it. Thank you so much for being such fantastic panelists. Everyone, please help me thank them.